I just went live on Guapcoin Official and Facebook, my YouTube, my YouTube, my Facebook page, and I could probably add a dozen other things to it as well. It's an incredible thing. So I'm very excited about it. And there's a way that I understand that we can actually stream, as I said, videos 24 hours a day. So welcome, Kang. How are you doing, brother? I owe you a phone call and I owe you a catch up, but I welcome. It's great to see you here tonight. I'm going to put the article that Jason wrote in the chat. And then I'll let just sort of Jason from a high level give us some background, and then we can just have some questions.
All right. So at a high level, what the IRS considers any cryptocurrency, it considers any exchange as if you exchange property. So you could give someone jewelry, you can give someone a boat, you can give someone a house, you can give someone, I don't know, anything of value. The IRS considers that transfer from one person to another of something that has a value to be a taxable event. So that's the exchange of property. That is how the IRS views cryptocurrency, at least as of today. It's interesting because the IRS views digital currency and cryptocurrency one way. The commodities, let me get this right here. The Commodities Futures Trading Commission, which regulates all kinds of commodities, they view it one way. FinCEN, which is the Financial Crimes Enforcement Network, views it another way. So crypto is still, at least in the US, a little bit of a mixed bag and kind of a gray area with regard to regulation, but the IRS has been very clear about how it views cryptocurrency, and that is its property. So anytime it's transferred from one person to another, that's a taxable event, and the taxes that are due on that are based on the fair market value as of the time that it's transferred. And typically, when you transfer property, it will incur either a short-term or long-term capital gains. So if you held it for less than a year, it'll be short-term capital gains, which is at a higher rate. If you held it for more than a year, it'll be long-term capital gains, which is at a lower rate. And the thinking is that those different rates incentivize people to hold investments for a longer period. So I had questions early on about, okay, I understand that if I transfer from myself to someone, that's clear. But what happens when I trade? There are certain types of capital gains that, when you trade for a like kind, then the capital gains are negated. That's not the case with cryptocurrency. So if you trade Guapcoin for Bitcoin or Bitcoin for Ether or Ether for USDT, that transaction is also a taxable event. My next question was, what happens when you're mining or you're minting? So for those of us in the room that have master nodes, what happens when those master nodes throw off rewards? Or is that a taxable event? Do I need to pay taxes on my rewards? According to the IRS, yes. Do I need to pay taxes on my rewards?
Sorry.
I hear my voice coming back to me. So yes, you have to. That is also a taxable event, and the IRS specifically addressed it in a notice. So this is IRS Notice 2014-21, and the question number 8: does a taxpayer who mines, quote, mines virtual currency, for example, uses computer resources to validate Bitcoin transactions and maintain the public Bitcoin transaction ledger, realize gross income upon receipt of the virtual currency resulting from those activities? So essentially the question is, if you mine crypto by taking part in the network and you get rewards, is that a taxable event? The answer is yes. When a taxpayer successfully mines virtual currency, the fair market value of the virtual currency as of the date of receipt is includable in gross income. So for those of us that have master nodes, we likely got 1 or 2 rewards today from that master node, and the fair market value of those rewards as of today would be the gross income that would need to be reported and taxes calculated on. So as of this past year, the IRS was not specifically requesting that information on the tax forms, but it's clear based on their guidance that that's a taxable event, that it should be reported and it should be taxes should be paid on it. So it's something to be aware of. The IRS is getting much more vigilant in dealing with this. Of the federal agencies, I believe the IRS is in line for the largest increase in workforce. And I think, and this is just my conjecture, but I think that has a lot to do with wrapping their arms around cryptocurrency.
Thank you very much, Jason. Are there any questions? Go ahead and raise your hand.
Yeah, Jason, this is Tony. Okay, just one quick question. As far as if you're holding, say, a master node, you pay taxes on that master node once, then in future years you shouldn't have to pay taxes on that. Am I correct? Or I can understand the rewards that you're getting, but once you pay taxes on the master node, do you have to continue to pay taxes on that same amount of quantity year after year?
So again, not a CPA, but I would say that when you say master node, I'm assuming that you're referring to the 10,000 guap in collateral that you need to purchase to get a master node going. And so what happens when you bring property, when you purchase something and you bring property into your possession, you don't pay tax on that until it leaves your possession. So whatever you paid for that 10,000 guap, that becomes the basis for how to calculate the taxes later on. So as long as that 10,000 guap remains in your possession and it doesn't move, you don't pay taxes on that. But when you do, let's say it's 5 years down the road, you decide I'm going to sell that 10,000 guap that I purchased in 2021. Let's say you purchased 10,000 guap for $1,500, and 5 years down the road, you want to sell that for $3,000. So the difference between your basis, which is the $1,500 you paid to get it, and what you're selling it now is $1,500. So you would pay tax on the increase. You would pay tax on what you've gained. That would be your capital gains. If you sold it for the exact same amount, there would be no gain, and that's that. So you would calculate the taxes once it left your possession. Now for the rewards, the reason why it creates a taxable event is because just out of thin air, by virtue of you taking part in a network, you're getting new property coming into your possession. So it entered your possession, it has a value. That is the taxable event. So your initial purchase of that 10,000 guap, that actually was a taxable event for the person that you bought it from. So that was an exchange, you paid for it. So you're not paying taxes on bringing that into your possession. The person who sold it to you needs to pay taxes on that earlier initial transaction. Let me know, Tony, if I answered your question adequately.
We just had Brian Jones join from, I'm sorry, is it Flash Financial? I'm sorry.
Flame Financial.
I'm sorry.
Yeah, no
Sorry
problem. And it's Breon, by the way.
Oh, Breon. I think we met once, but I apologize. I'm bad with names, as I said. But welcome, welcome. For those that, well, why don't you go ahead and introduce yourself and tell us who, be sure to mention who your business partner is, because some of the people in the room will know her.
Oh, sure. So my name is Breon. Good evening to everyone. So I represent Flame Financial. We do business as Compo Tax Flame. As Okolo mentioned, you may or may not be acquainted with my business partner. Her name is Kamani Harrison. She's also a member.
Your voice is cutting out a little bit. It's a little distant.
Oh, sorry about that. Let me switch from my headphones. How about now? Do I sound a little better?
That's better. Thank you.
Okay. So yeah, as I was saying, my name is Breon Jones. I represent Flame Financial LLC. We do business as Compo Tax Flame. So we're an accounting firm, mobile and virtual accounting firm. You may or may not be acquainted with my business partner. Her name is Kamani Harrison. She's also CEO of the Key Bookstore, which is based in Hartford, Connecticut. So she is active in the Guap community as well. I'm just now, coming around, to becoming more active myself. But I've been aware of the Guap community for a number of years now. But I am a tax professional, as is Kamani. So that's the reason why I'm here tonight. I heard there was a discussion of crypto and taxes, and I know people have a lot of questions, a lot of concerns, a lot of misinformation is out there. So
Now the voice trailed off again. That's better.
Okay. But yeah, I'm just here to, join in on the discussion, whatever you guys are talking about as it relates to crypto and taxes. That's my forte. So
Well, welcome to the room, Breon. You can check my notes as far as the conversation. So basically, I don't know when you walked into the room. So basically, what we've established is the IRS, at least as of today, views cryptocurrency as property. Taxable events are created when the property is transferred from one person to another, or when it's generated via mining. So those are the things that, at least from my view, that people who are involved in Guap Coin need to be aware of. That when they trade, taxable event. When they mine, taxable event. And all that stuff is supposed to be reported.
Yeah, I think you hit it right on the head. The main thing that people have to know is that crypto, while it is a relatively new asset class, the IRS wants us to treat it as if it were any other capital asset. Examples that you all probably are familiar with are real estate, stocks, bonds. Well, crypto is to be treated no differently. So as you probably already mentioned, crypto is subject to the capital losses and gains rules. So you have to look out and understand what are the certain events or taxable events that may occur from your transactions as it regards to crypto. There's like a list of taxable events. I probably would want to put together a list of sorts for people to have a quick reference, but to keep it simple, it depends on how you use, your crypto, whether we're talking Guap coin, Bitcoin, or any other cryptocurrency. Just think about the ways in which you use it, and then, start the conversation with, your tax professional from there. Because most people, when it comes to crypto investors, you got at least two different types. You got the people that are kind of like day traders, and they initiate transactions on a daily basis. Those are the people that, if they have not done their homework, they're going to be in for the biggest surprise. Because, transactions can easily be taxable, depending on what product you're using to purchase, or what product you're purchasing with the crypto, and other ways in which you could use it. But if you're on the other side of the coin, no pun intended, you have people that like simply buy, you know, crypto, they obtain it from an exchange, and they just hold it, you know, in their wallets or whatever. That's not a taxable event. The act of simply purchasing crypto from an exchange, or receiving it from an exchange is not taxable. And if you hold it in your wallet, you're not subject to tax. It's only when you realize a loss or a gain from a transaction that the crypto would become taxable. And that's where you have to know, like, for example, the cost basis, which is how much was that coin valued at the time at which the transaction was made. Yeah, you have to know the cost basis, fair market value at the time the transaction was made, and that's how you determine how much your tax would be. And I know there's like a lot of jargon involved with this, so but bottom line is, if there's anything that you don't quite understand, definitely seek the help or the counsel of a tax professional.
Can you put your link?
Has, you know, publications and instructions on their website, which you could follow, but you just find someone you can trust in the tax industry and we'll get you right.
Can you please post your link in the chat? I've not yet had a chance to update you into my presentation. I will be. And also going to be building a website out soon, which of course will have the links as well.
Sure.
I see that Yvonne. Oh, go ahead. I'm sorry.
Oh no, I was just going to say I'm going to put my website in the chat, and you can also follow us at on social media, Facebook and Instagram at Conco Tax Lane. I'll just drop it in the chat for you all.
Great, thank you. Go ahead, Yvonne.
Thank you very much. I'm wondering if one of our guests could speak to, as a business owner, what's the best way to manage the taxable events? If we want to accept GWAP for our services, then what do we need to make sure we're tracking?
Jason, do you want to try to take a little bit of a stab at that? Well, you know what? Let me take a stab at that, and then I can have the professionals correct me. If you accept GWAP and you are holding on to it, there's no taxable event. There's no issue. If you accept GWAP and then you sell it, it's as if somebody paid you with a stock. Oh, so actually, here's a question that I have for you guys. So if somebody gives it to you at value of, let's say, 50 cents. So anyway, no, I guess that is your cost basis. So if somebody gives it to you and when it's 50 cents and then you sell it at $1, then you then have to pay taxes on that 50 cents. If it's within a year, you pay short-term capital gains, which is equivalent to ordinary income. And then if you go over a year, then that's long-term capital gains. I don't have the exact number right, but it's a lot better. And it's how the wealthy basically skirt a lot of taxes, because that's their form of income, where most of us have ordinary income, which is, of course, coincidentally, one of the highest forms of income. So I think that's the issue. If you guys could just address it, it's not so much accepting it, but it's then, of course, utilizing it or selling it after it increases. So a question I do have for you guys is, if you accept it and then sell it immediately and do not recognize a gain, is that a taxable event? So in other words, you accept GWAP, it's at 50 cents, you sell GWAP, it's at 50 cents, and you now put the money in your pocket. That's income. Like, gosh, my head just went in a swirl spin of what's income tax, like where's the product cost and the revenue share. Like, anyway, I just confused myself talking in circles. So I'll just let somebody clean it up for me.
So I'll take a stab and I'll make way for the real pro in the room. But if you accepted, some piece of property, in this case, cryptocurrency, for goods and services, and then you immediately turned around and sold it, and there was no gain, then there's a taxable event, but there's no tax liability in that case. So there's nothing due to pay taxes on. So there's an event because it left your possession, but when you calculate what's owed, there's nothing owed because there was no gain. I think that's correct. But what you want to make sure is that in this scenario that we've laid out, you need to record the fair market value of that property when it comes into your possession. Because if it's a year from now, 2 years from now, 3 years from now, you need to be able to properly determine what the gain is. And you won't be able to do that if you're not recording what the value was when it entered your possession. So you kind of need to have that like in your records.
I see a business opportunity here. If there's any programmers listening, we need a program somehow that can help people figure all this out. Cost basis, maybe we can even look back on the chart and determine price on the average cost in a given day. I mean, I'm sure if we go back and we give some approximations, is the IRS going to, anyway, if WAP fluctuates between 13.5 cents and 14 cents, are they going to hold us to that? I don't know. I'm not the tax professional advice, but what I see here is a business opportunity for someone to write a piece of software to help us figure this out. And that's what they always say, that, I love Mark's analogy. I think I've heard it before him, but there are people who made money off of the gold rush in California by mining gold. There are those people who made money off the picks, the axes, the jeans, the food, the drink, the shelter, let's be real, the prostitutes, everybody was part of the ecosystem and the economy. So I see this as an opportunity for somebody to really step into a gaping hole that's needed, probably not only in the guap coin community, but in the crypto community broader. How they're going to answer that, I don't know. But it's a problem that's needed. Breon, anything else you would like to add to my poor attempt to explain it, and then Jason's better attempt to explain it? Maybe you can tie it into a nice little bow for us.
Yeah, so the original question is, what if you were to initiate a transaction?
No, the original question was if you're a merchant accepting crypto or guap coin, what do you need to make sure that you keep track of so that you're on top of this tax potential?
Right. If nothing else, you need to record your cost basis. So in other words, let's say that you're a merchant. Yeah, right. Let's say you're a merchant and you accepted 10,000 guap for the sale or for any product that you sell. You'll want to know how valuable that 10,000 worth of guap was at that moment in time, like at which point the transaction was made in US dollars. So as you guys know, crypto, just like with the actual US dollar, other currencies, their value tends to fluctuate, sometimes wildly. And it could fluctuate on a daily basis. So that's the point in recording the cost basis. In other words, how much was the coin or the amount of crypto that you transacted on that day, how much was that worth in terms of US dollars? That's what you'll need to record. You'll need to do that with every transaction, whether or not a gain or a loss was realized. I think the other question was what were to happen if there was no gain or there was no loss, like the value remained stagnant. And I would agree with what Jason said earlier. It would still be a taxable event, in which case you should still make an account for it in your records. Just note that no gain or no loss was realized.
So I
have a question, Jason, or either one of you. And I'm just sort of thinking about this, and Yvonne's question certainly has me thinking. Could this be? I of course I love WAP, I love crypto, I love blockchain, but these questions have to be asked. Could this be a death nail in utilizing crypto as a currency if the government doesn't accept it as a currency? Or are the taxes that we might have to pay on this worth it, because it's income and gain anyway, so why are we complaining? Like, is the accounting nightmare gonna turn people off? Like, where there's obviously there's a large number of fluctuations where this could happen. So I'm just curious if either of you see this as a real problem with crypto.
I think it could pose a problem for, well, I'll say this. Over the past few years, cryptocurrency, as well as platforms like, Robinhood, Webull, Acorns, platforms that you all are probably familiar with, they've opened the door for like just average people, who had no formal education in the way of investments goes. It opened the door for like just the average Joe to start investing. And those, I believe, are the people that are going to, I don't want to say struggle the most to wrap their heads around this, but I think those are the people that will be the most impacted. As far as, whether or not, the new legislation that's coming down the pipeline will be a death knell for cryptos, I don't think it will be the case. It's just simply a matter of, people having to strategize like around, whatever legislation comes down the pipeline. Because again, what the IRS is doing the crypto is no different from what they're already doing for other types of assets. Like, we're still, like, crypto is subject to the same laws that real estate is now. The same laws that stocks and bonds are subject to. So it's really nothing different. It's just, something that people are going to have to educate themselves on, or like really plug in to the resources that are available to them to help them, guide them through the process to make sure that they're compliant as far as an IRS perspective goes.
Yeah, I would agree. I don't see this as a death knell, but more of as an opportunity for someone that's enterprising, businesses that are enterprising, that will create solutions that are simple, that figure out this complex stuff on the back end, and they are able to capture value based on that. I mean, if you look back, let's say 5 years ago, you could say the same thing about the complexity of just obtaining crypto. You had to go to these obscure places on the internet. People were afraid, blah, blah, blah. Now you can just pull up your Cash App and you can buy Bitcoin right in there. Before Cash App and PayPal came on, it was Coinbase that created an easier interface. So someone's going to step in and make this relatively simple and put a nice bow on it. But I think what needs to happen going forward is just more certainty around how all this is going to be regulated. So the IRS has their guidance. There's just the fact that they have their guidance out there helps with this. Probably need to get more guidance around the other agencies that also regulate crypto, just so people know what the ground rules are. Once the ground rules are known, tools will become available to make this easier.
He was using my account or something, but
Yeah, Okolo, this is Tony. Yeah, I agree with the rest of the guys. It's just like your gold rush example is perfect. It's the same thing. Right? There people are used to using different currencies with different countries, right? And so the software will develop, process will develop, and the legal, how you classify it, that will continue to develop. So the risk management and how we take advantage of the opportunity is exactly what you're doing now, right? This meeting. Right, we weren't able to have these meetings and have these discussions so we can capitalize on these events. But by this very nature of this meeting, we have some of the top people around the world, brains, business, legal, CPA, and we're getting that into the hands of the Black and brown community. So this is awesome. right? Just opportunity right now for business.
I appreciate you saying that, Tony, because sometimes we get so busy working and doing and acting and talking and getting excited, and we sometimes forget what we're actually doing here. Sometimes, but I appreciate the reminder that we're what we're doing here is bigger than just me figuring out what my tax liability is for my crypto. What's my tax liability for my Masternode? No, it's really about, let's figure out this whole financial economic thing that is happening around the world, and let's make sure that we're a part of it and that we're leading it and we're part of solving those solutions and solving some of those problems. So I appreciate the reminder, because I sometimes perhaps get a little so tunnel vision focused on the next task, the next phone call, the next project, the next fire that we need to put out. So thank you. Any other questions? Go ahead.
There's a question in the chat I want to address before.
Oh, sure. Go ahead.
So I dropped a link to a FAQ that the IRS published that has a bunch of scenarios, and it actually addressed the scenario that was brought up earlier. And I put a question and answer, and it talks about when you receive cryptocurrency on a trading platform or on an exchange, how do you determine the fair market value? And it says the fair market value at the time of receipt is the value on that exchange. So the question was, which exchange is the measure? So in that case, when you get the crypto from a certain exchange, let's say you get it from Coinbase, it's the value on Coinbase at the time of your transaction. Now, if you get it directly from a paying customer who paid for your good or your service with crypto, the next question in that FAQ, which is question 27, addresses that. So it says the IRS will accept as evidence of fair market value the value as determined by a cryptocurrency or blockchain explorer that analyzes worldwide indices of a cryptocurrency. So for example, we have a blockchain explorer for Guapcoin, and it references the current value of Guapcoin on the one exchange that we are traded on. As we come online with multiple exchanges, that price that is published on our Explorer will be an average of the different exchanges. So what you see when you look at Coinbase and you see the price of Bitcoin, or when you pull up CoinMarketCap and you see the price of Bitcoin, what they're actually doing is they're pinging multiple exchanges around the world and bringing together kind of an average price. So what the IRS is saying in their guidance is that they will accept that value that is an analysis of all the worldwide indices for that coin on that crypto's Explorer. So that's one way of doing it. It says if you do not use an Explorer value, you must establish that the value you used is an accurate representation of the cryptocurrency's fair market value. What the IRS is trying to get at there is that you don't use some obscure crypto that has the price super low when the majority of other exchanges had the price somewhere else. So they're trying to get you to actually put down what is the fair market value. So the fair market value is the published, value. If it's available in multiple venues, multiple exchanges, then typically it would be either the average of those as published on the Explorer, or maybe sometimes it's just what's the most popular one, what's the one that most people go to. So there's a little bit of a gray area there, but it's pretty clear that if you go to the Blockchain Explorer and use the price that's published there, that you can rely on.
Thank you, Jason. Mr.
Sure.
Yvonne, I appreciate that. Appreciate your attention to that question. I also want to thank Tony Thompson, because I, as a business owner, I am thinking about the opportunities that are here. And Breon's point, and to your point, I think, and Okolo mentioned this, it seems to me that we're really being incentivized. When I think of strategy, I think we're being incentivized to move it. So for example, if I, as a business owner, receive Guap coin from my a customer, then I could turn around and buy a book that I've been want to purchase from Key Bookstore. Like I could literally move it, and if I move it through the community, I'm moving value through the community.
So that goes beyond our tax discussion, but that is dead smack in the middle of the vision and mission of this project. That is what we want to do. We want to create our own network effects with the Guap coin passing through our community and going from consumer to producer to another producer, maybe to another link in the supply chain and back again. So we want to short circuit the typical journey of the dollar, where it comes in our community as wages and goes right out the door as we spend. We need our currency to live in our communities for a little bit longer, actually create something, build something, and, then if it leaves after that, okay. But that's the idea, is that if we begin to create a community of producers, a community of service providers, a community of consumers that are moving this currency amongst ourselves, we can build up a financial foundation where we can, and then we can see it. That's the beauty of the blockchain. Like we can see right on the ledger, publicly available, where those dollars are going. Well, I'm sorry, where those Guap coins are going, which businesses are actually serving the community at a high level. You can see when it leaves the network, when it comes back. So it's that transparency that will be key as well. Because now we won't have to rely on statistical analysis and a lot of guesswork to figure out what's happening, what the spending power of our community is. You'll be able to see it in black and white on a public ledger, and you'll be able to take people to task. Certain corporations that make promises, we'll be able to know at a glance, okay, what's your Guap coin addresses? and we'll be able to tell them, oh, our people have moved this much Guap coin in and out of your company. Why aren't you responding to our demands in this other area? So, these are like far-reaching goals for this project, but you touched on what really is the reason that I'm here and what drew me to this project in the beginning.
I see it. I see the incentive to move the resources through the community. And I like to give. So, and I know many people in our community like to give as well. So if there's someone who could also speak to what happens when I want to give my value away.
Are you referring to like gifting Guap to someone else?
Correct. As it said, like I say to my cousin, hey, download this app. They download the app. And then I just give them 100 Guap. So now what? Is that a taxable event?
That's the same. I'm sure the gifting laws would apply there. And could someone remind me, is the gifting right now 10,000, 12,000, 11,000?
Up to 15,000. It's up to
15,000. Thank you. Of course,
As of 2021, you can gift up to 15,000. One individual can gift up to $15,000 to another individual without being taxed. Anything over 15,000 may be taxed depending on if the person has exceeded the person gifting. Okay, the person receiving does not have to pay taxes. The person who gives the gift may have to pay taxes if they have exceeded the lifetime minimum. And I think as of 2021, it was $11.54 million. If you've gifted someone greater than $11.54 million, then you would owe taxes on the amount above the 15,000.
So is it fair to say that would be whether it's crypto or a house or a pile of cash, that's true either way, Breon and Jason? I'm sure the answer is yes, but you could just nod your head. Okay. Any other questions? Any other comments or questions? I really want to thank both Jason and Breon for their input and for their expertise. We can see now what some of the areas are going to be in the growth of both Guapcoin and the crypto ecosystem. Putting our arms around this crypto thing, we can now see why people have what are they called, lobbyists. Is Guapcoin actually going to have an army of lobbyists soon? Dear God, help us. But anyway, any other comments or questions? I think ending just before an hour would be perfect. And I want to thank everybody for their participation and their continuation and support for these meetings. If you have any questions or suggested topics, feel free to email me. You can also just email, if you just reply to any of the emails that I've ever sent. I do read and check and respond to every single one of my emails. It isn't always instantly, but I do eventually get to all of them. So if there's no other questions or comments, I bid you guys good night and peace.
Good evening, all.
And please, Sister M Queen, please report back to us what you find in the UK and what it would take, what kind of financial education and what companies are doing things over there, and how we can form what is really an international partnership. Whether that means having a Circle Financial in the UK that has its own people who are licensed in your country. That just idea came to me, and it would be a fantastic and wonderful vision that I would love to see come to fruition, or whatever your interests are. The other person who mentioned that they were doing, already doing international trade. I'm certainly interested in learning more about what she's doing. Oh, Cleopatra, I see that you had your hand up, I think. Did you have a question? Go ahead. Maybe not. Okay. Good night, everyone. Have a good night.
Good night.
Thank you. Good night.